Hi there and welcome to Markets Tomorrow. I'm Neeraj Shah.
Hi everyone, I'm Avan Nabash. Let's start off the show by introducing the experts who will be with us over the next half hour. Krishna Kumar Karwa, Managing Director and CFO at Emkay Global Financial Services will be with us. And Ashwini Gujral, Fund Manager at ashwinigujral.com joins in on the chat. Ashwini, I want to start off with you on your assessment as to how trade panned out in today's session. It's been clearly the worst start to the new year since 1996 and in fact, do you think that now the selling pressure is here to stay?
Well, it's not been intense selling pressure. It's been, 25-30 points a day. And I don't think it matters whether first 5 days are good or not. What will matter is the rest of the year should turn out to be good. And basically, it's a 200-point sort of range, 6130. 6150 to about 6350. For people who would like to enter the stronger groups like pharmas or techs or metals to re-enter at lower levels.
Okay, Sudeep, thanks for joining in as well. What's your sense? It's not been the best of starts. Is this an indication of how earnings will be, or is it just nervousness before we resume the uptrend again?
Well, Neeraj, I don't think it's got anything to do with the earnings. I think it's generally market is drifting down very, very slowly. It is predominantly caused by I think markets had rallied quite a bit in December and there was some amount of correction warranted, and B, I think global markets also haven't been very, very supportive. There is very clear indication that the little bit of squeeze in liquidity in the global markets is happening, predominantly led by China. I think that's the reason why Indian markets are soft. I don't think we should read too much into these last 5 days correction.
KK, what about you? Do you also think that the markets, is somewhat nervous when it comes to the macroeconomic data, perhaps the IIP data for the month of November, the trade data in December, next week it's going to be the inflation numbers as well? And more importantly, what exactly are you expecting from the markets in terms of the RBI action as well?
Yeah, rightly so what you say that the rally has been sharp, but the data has not been supportive. So this rally has been basically a rally led on hopes, and so you will have these periods of introspection where you possibly feel that the markets have run ahead of the immediate fundamentals. I think we are through that phase as of now, and that's why that is the reason why we are seeing a kind of consolidation or maybe a small downtick for the last 4-5 days. And you have the result season coming ahead, and you are not too sure whether the results will be supportive of the sharp rally which has happened.
Sudeep, a couple of earnings coming out this week, and that will have a bearing on how at least companies from that sector may make a move, one of them being Infi, the other one being IndusInd Bank. What's the view really on these two?
Let me first take the easy one, IndusInd Bank. I think they have been consistently performing very well and beating market expectations. If I remember rightly, last 4 quarters they have performed exceedingly well. I think the trend will be maintained. I think they have an excellent management team. The asset quality is excellent. The margins have been increasing. So I have no doubt about IndusInd, and I think they will post good earnings. On Infosys, I think I'm a bit cautious. Last time I was bullish, and I think I mentioned to you the results are going to be good. But this time I'm a bit cautious on Infosys. There has been too many changes in the setup. While this may be good for the company in the long run, I think in the short term there may be some softness as far as the earning numbers are concerned. And I will probably look at this earning as an opportunity, this earning and related correction as an opportunity of buying Infosys.
Speaking of the earnings season, KK, run us through your expectations for Infi. The stock is going rather weak into the earnings as we've been seeing. What really is causing the nervousness? Obviously, all of those high performance exits.
See, Infy had a good run in the last 2-3 months, and always before the result there are expectations either way, and there have been quite a few top management changes. So investors are expectantly waiting in terms of what kind of guidance is for the coming quarter and the way forward as far as the strength of the various business segments is concerned. So it's not surprising that there is some element of volatility in the counter before the results. There is huge amount of expectations from this stock in the coming 1 year or coming few years, and so it's natural for investors to be trading in this counter just before the results. But having said that, we believe that amongst the large cap IT pack, Infy should deliver superior returns in the coming 1 year.
Ashwini, what's the view on CNX IT? Because it was extremely active in the last 1 hour today, while Infosys wasn't. So what do you do with this pack, and particularly Infy? How do you trade this one?
See, my 2 bits on Infosys.
Sure.
You know, these are the same people who could not manage the company and Murthy had to come back. Now when these people are leaving, I don't think, market has to worry about it. When stocks run up, they correct. Reasons can be different. But if, Murthy has to change things, he needs to let go of the old guard. So having said that, I think CNX IT still remains in a very, very strong uptrend. This is the only trending index in the market, and any corrections towards, say about 9400 should give you cause to buy into this index. There is no question of selling. As far as Infosys is concerned, I think just doing some ranging moves, and maybe at lower levels people should consider getting into Infosys around the 3350 to 3370 type of zone if it gets there. And I think given that from 2000 it's at about 3500 now, that's been a fairly substantial rally, and correction should be used to get into the market.
And let's talk to our experts about some of the beaten down pockets as well, because the last 2 or 3 sessions there has been some pressure on a couple of these pockets. Will the Nifty doing what it is doing? Look at some of the others, Tata Power, Reliance Infra, NTPC, and all the talk of the power rates being cut is probably having some bit of sentimental impact on these stocks, if not fundamental. KK, is that the point? I mean, what would you do with some of these stocks, Tata Power, Reliance Infra, NTPC for that matter?
See, many of these stocks have their own independent challenges, but of late things have been improving in the sector, and I believe that going forward also these sectors will continue to benefit because of the policy changes, etc. So these are temporary aberrations as far as the negative is concerned because of the subsidies, etc., given by the Delhi government. So, in a longer term basis, these are utilities which will deliver decent returns. NTPC at current prices should offer decent returns to investors.
Just wanted to talk, Sudeep, about individual stocks in today's session, particularly from the broader markets. You had the likes of Sri Renuka Sugars, Suzlon, some of them doing well. From the commodities pack, what is your view on how some of these sugar names are likely to perform, and what do you think is going to be the next trigger?
Well, I think, very clearly there are 2 factors which impact the sugar stocks. One is the global demand supply production. The other is, of course, unique to India, which is the entire subsidy and the related, noise which is created around it, the state subsidy, the central government's intervention, the sugar mills, the farmers. So I think the entire subsidy issue is still a little messy. The entire problem hasn't yet been solved. Yes, there is a report by a Rangarajan committee which is very clear as to what needs to be done, but the government hasn't gone and implemented that. So I think there is still some way before this entire subsidy burden and related issue gets resolved. However, the global scenario of sugar for 2014 looks good. We believe that as far as the sugar companies and by and large the agriculture-based companies should do well in 2014. Specifically for Sri Renuka, of course, the news is in the market regarding a possible stake acquisition by a large foods company. And if that happens, I think that's excellent news for Sri Renuka. They have a huge debt, and we understand that there's going to be a preferential offer which brings in money to the company. And I think that's good news for Sri Renuka investors.
Good news it is, yes. From sugar on to pharma. And I just want to speak about that space because it was quiet in the session today, maybe along with the markets, but look at what an Aurobindo Pharma did, look at what a Biocon did. There have been strong stocks which just came off a little bit in the session today. Actually hardly off, flat would be more like it. And actually not unwarranted because they have had a fantastic run. But what do you do with a Biocon and Aurobindo Pharma, probably even a Ranbaxy, looking at how it's done the last few days, if indeed they were to correct a bit more tomorrow? Would that be an ideal opportunity to enter?
So you must enter stocks once they have completed their corrections and have restarted their run on the upside. So it's very difficult to say whether you should enter tomorrow or day after. But these are the stocks that you should enter. Now you have to wait for the correction to end, overall market as well as these stocks. But chances are they will not correct a whole lot from here, and buying will come back fairly soon. Because these are those 25-30 stocks which are showing some sort of trend. The rest of the stocks pretty much are sideways.
Sudeep, everyone seems to be talking about a comeback within the capital goods sector with policy initiatives that are going to be undertaken. And, you know, case in point is the way Crompton Greaves, L&T, BHEL, some of these stocks have been moving. Is the tide likely to turn for the better when it comes to this space?
Avan, you're asking me?
That's right.
Yeah, I think, the entire story regarding capital goods making a comeback is a little premature. We don't believe that, anything has changed drastically in ground to start buying capital goods stock at this stage. Yes, there are preliminary signs of certain improvements, at least certain statements are being made, but on ground things haven't changed. So I will stick to our view of, if you are really wanting to take a bet on L&T, buy L&T. It's a good stock. You can buy very, very safe bet. However, whether to start buying Crompton Greaves after it has shown this kind of rally or to get into BHEL now, I'm not very sure, and I won't recommend investors to buy in. There are enough and more uncertainties in the economy still now. The macro economy hasn't yet been set right. The deficit hasn't been contained for the time being, but I don't think we have found a solution yet to all the problems. Economy hasn't started, chugging back. So I think let's wait and watch before jumping into capital goods.
Fair point. Metals were soft today. Tata Steel, SAIL, maybe a JSW did okay, but some of the others, Sesa Sterlite, were down. And KK, while a couple of names may be showing traction off late, what do you like in the metals pack?
We have been positive on JSW Steel, because of the domestic realizations are stable and also because of the strong export capabilities that they have developed. So that's one stock which could deliver decent returns going forward. In fact, TISCO also has delivered decent returns in the last 3-4 months, and if Chorus continues to deliver going forward, then from here also this could be another stock to look at.
As promised, we're identifying some individual stocks to keep on your radar. So we're getting a 360-degree view. First, we start off with what exactly the dealing rooms are advising. We've got Yatin joining in from our research team to tell us that. Yatin.
Well, if you look at Bharat Forge, that is one stock wherein a lot of brokerages have been positive on. Recently, after the quarterly results, we had some price upgrades coming in, but this time again ahead of the results, we have Bank of America, which has increased the target price to 390, and Barclays also has increased the target price on the stock to 373, almost implying a 10 to 15% minimum upside from the current market price. Most of the brokerages believe that the turnaround that we are seeing in their foreign subsidiaries and the volume and margin outlook that has shown some improvement, and on the back of that, we have seen some EPS upgrades coming in for FY15 and 16, and that is the reason why most of them have increased the target price. From the trading perspective, dealers are quite constructive on Bharat Forge. Apart from that, Agrotech is something that you need to watch out for. The stock has hit a record high in today's trading session. Of course, we have the buzz in the market that its parent Conagra is looking to hike stake. Whether or not via open offer or open market purchase, that is not clear. But the promoters are looking to hike stake is something that is keeping the stock quite active in trade, and dealers still recommend a buy at these prices.
Thanks very much, Yatin, for joining in and giving us that view. Ashwini, wanted to get in your top bets for tomorrow?
Well, Tata Motors DVR is a buy with a stop of 184, target of 199. Maruti is a buy with a stop of 1825, target of 1900. And Tata Steel is a sell with a stop of 407, target of 385.
Okay. KK, I would want to come to you first. What are your high risk, high return ideas for 2014?
First of all, I think this concept of high risk, high return, I'm not too sure whether that's the concept investors should follow. I think it's best to follow a conservative thought process of investing rather than going for high risk, high return thought process. Having said that, we believe that IT will continue to deliver positive returns. So many of the mid caps in IT should deliver positive returns. That's the segment where we are comfortable with, because there is a large event in between, which is your general elections, and we don't know what can happen over there and how things will pan out post that. But the visibility for IT companies seems to be strong, so we believe that many of the mid-cap IT companies could give you good returns, and there could be a positive change in their discounting. So that's one segment. The other segment that we are very comfortable with is the pharma pack, where again there is a lot of mid-cap companies which have delivered good returns, and where we believe that there is a possibility of further re-rating of many of the stocks in that segment. So that's two segments where we believe that could give positive returns in the coming 1 year.
Thanks for that, KK. Sudeep, just a couple of stocks which have been doing very well of late, and one of them is CESC, something that you had recommended. Now, First Source is doing very well. The power business seems to be doing okay too. And of course, Spencer is anybody's guess as to what it does with regards to selling out or something, or an FDI coming in. How would you play CESC now?
Well, I think, Neeraj, CESC has been a favorite for us for quite some time, and we continue to believe in CESC even at current levels, as you rightly, listed all the reasons. But out of the reasons, we are most bullish on the Spencer turnaround and value unlocking in Spencer. I think very clearly turnaround in Spencer is in front of us. It's very close to break-even, reaching break-even on a store level and overall level on Spencer's. Apart from that, I think very clearly next 12 to 18 months there will be a value unlocking of Spencer by the group and CESC. So I think we are looking at this stock going up to 550 in about a year's time, and I think it's a good buy for conservative investors at current levels.
Sudeep, let's also talk about Reliance Industries, and you've been fairly bullish on that stock. Given that it has been seeing a mild amount of uptick, the news flow of course has been consistent, but it's been a fairly slow mover. How would you approach it now?
Aman, I think, one needs to have faith to buy Reliance. Very clearly, it has not done anything for last few years, but we strongly believe that there are a whole lot of reasons why it will be, breaking out from this range in the next 3 to 4 months. One is, of course, gas pricing. Second is, the margins have been good on the refining side. Third, I would say the shale gas production for the assets they have acquired abroad is increasing. And of course, there is always the emerging stories of retail as well as telecom. So all put together, I think 2014 will be a year of Reliance, and I think the Sensex will derive most of its strength from the performance of Reliance as we go forward in 2014. Okay.
Ashwini, just a word on a couple of these strong names in the cap goods space as well. They were doing very well yesterday, and at the start of the trading day too, not the worst of days. How do you play a Havells or say a Crompton or a Voltas?
Well, these stocks have continued to rise even while the markets have corrected. So chances are that in case there is any sort of bounce back, these stocks should head on the upside, because momentum clearly has been maintained in several of these stocks. So Voltas, Crompton, Arvind, all of these stocks can be bought on declines.